Yo, my fellow traders, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing because on this channel, I always deliver my best. Yeah, so follow me closely as I walk you through. In this video, I'm going to walk you through the 3 advanced order blocks you need to know. Yes, generally, it's only 2 types of order blocks traders are being exposed to, but in this particular video I will disclose the advanced 3 types of high probability order blocks. Yes, in retail concepts, traders look for support and resistance levels to place trades, but in smart money concepts, traders look for points of interest levels, and inside these points of interest levels is what we have high probability order blocks, and these are the order blocks that we enter trades and place our stop loss just above them. So I'm going to start with the first type of high probability order block, which is called standard order block. So I'm going to draw the diagram for you to see how it looks like there. So this is how standard order block looks like on the charts. The first bullish candle is longer than the second bearish candle. So in mapping it, you target the body. There are 2 ways of mapping it. You can map targeting the wicks or the body. So I will target only the body. Yeah, so this is one example of standard order block, and this type of order block is normally located at the premium level when looking for your sales, and then the other one is normally located at the discount level when looking for your buys, like this. Yeah, so this is another standard order block located at the discount level. So that's how it is. The last candle before the downtrend or the uptrend, it doesn't matter the size or the color of it. In short, what it does is it manipulates before moving down or upward. Yes, so right now I will take you to the charts and then show you how to locate them. Yeah, this is a typical example of standard order block. Let me mark it. The last white candle, which is a bullish candle before the downtrend. So I'll map it, targeting the body. The whole of this level of interest was our order block zone. So you could see the moment price left in this order block zone, it came back in future for a retest with a marginal pips differential, then went bearish. Let's look at another example. This is another example, the last whitish candle before the down move, but it wasn't powerful. Another one to is here, the last whitish candle before the downtrend. So they are located almost everywhere. Standard order block, target only in the body. That's it. It can also be located at the discount level, not only at the premium level. This is another one, typical example. Yes, located at the major premium level, the whole of this zone. So when you add the lower wick to it, you will see price in future. As price came for a retest, it got rejected with a marginal pips differential, tapped some liquidity, then went bearish. So that's how it is, my people. This is one typical example at the discount level, the last bearish candle before the uptrend. Yeah, this particular one, standard order block. So when you extend the level, you could see in future price came back and tap liquidity in the order block, then went bullish. So order blocks serve as a wall or turning price for price to change its course. So now let's get to the second type of high probability order block. But before then, there are 2 ways of trading this standard order block. The first one is by using the body of the order block, and then the second one has to do with using the wick to trade. As you look at this carefully, the standard order block here has no wicks, so I only marked its body. So that is one way of entering the order block. But assuming it has wicks, you can extend the map to the wicks, then you draw it. So there are two ways of entering it. So let's get to the second type of high probability order block. Yeah, the second type of high probability order block is engulfed order block. So I'm going to draw it for you to see how it looks like. Yeah, this is how engulfed order block looks like. So in mapping it, you either target their upper wings and lower wings or their bodies. So in this case, I only target their bodies. There are two ways in mapping it, so it doesn't matter whether you target the wings or the body. So this is what our engulf order block, and this type of engulf order block is located at the premium level. It doesn't matter whether it is a buy or sell candle. It doesn't matter the color it has. What matters is the second candle must what? Engulfed the first candle. As you can see, the bearish candle engulfed the bullish candle. So meaning the whole of this zone is our engulf order block, acting as a wall for price to reverse. Now let's get to another example of order block which is mostly located at the discount level. So this is our second engulf order block located at the discount level. So in mapping it, you either target the body or the wicks. In this case, I'm only targeting the body. So the whole of this zone where liquidity is. So I'll take you to the charts and then help you to locate them. This is a typical example. The last whitish bullish candle before the down move. Yeah. So the whole of this zone was our engulf order block. Yes. But it got violated or invalidated in future. So price traded beyond it and continue its direction. This is another typical example. The second candle engulfed the first candle. So the whole of this zone was our order block zone. You can even include the wick if you don't mind. But I'm comfortable mapping its body. Yes. So let's see in future what happened. Let's get to the higher time frame. This is another typical example. With this scenario, I think there was a high impact news here that caused this momentum bearish candlestick to be bearish. Then in future, price came back to this engulf order block level, tap liquidity, went back, and then went again for another retracement. But this time it's like it got rejected at the wick. Yeah, with the small pips at the lower wick, but got rejected with the marginal pips differential. Then went bearish. They are mostly effective at the major zones. Yes, it's another powerful one there. The second candle engulfed the first one. Yeah. So after that, price made a momentum swing low to the downside. Another one to is here. So they are like that. Yeah. So at the discount level, this is a typical example because the second candle has engulfed the first candle. So the whole of this zone was our bullish engulfed OB zone. Another one too is here. Just after price left that zone, it got momentum and then went bullish. A typical example too is here. And so they are everywhere in the markets. You see, so in future price made a retracement, tapped some liquidity, then went bullish. Another one too is here. So it's like that. Now in trading, there are two ways to trade the engulfed order blocks. The first one is by using the wicks in drawing the map, and then the second one has to do with you considering its body when mapping it. Yes, so there are two ways of trading it. Now let's get to the third example of the high probability order block. Here we have our third one, which is the last type of high probability order block, which is called breaker order block. So this one is a little bit complicated, but I will try my best and illustrate it for you to see. So this one, it is mostly located at the middle of the trend, and some too are located at the major levels. So The mapped zone is our breaker order block zone. Because of time factor, I wouldn't be able to rejoin the candlesticks, so I'll just use a line to illustrate the price movement. So this is our breaker order block zone. As price left the breaker order block, in future what it will do is it will reverse and violate the breaker order block and go bearish. As it happens like that, it will not continue its bearishness. It will make a retracement and then trade the breaker order block here, gather some liquidity, then finally continue its bearish direction. That's what it means. So first, price will break the previous order block that has been formed and now return back to it. That's how it is. So price violated or broke the order block, now return to it for liquidity, then continuing direction. Same applies at the breaker order block being formed at the discount level, but because of time factor, I will not able to illustrate it, but that's how it is. It just works perfectly as this one. Now I will take you to the chart and then show you how it looks like. Yeah, this is another typical example. The last bullish candle there before the down move. So the whole of this zone was our breaker order block. So as price left the order block, it went back for a retest with a marginal piece differential. It didn't touch the order block exactly, but with the marginal piece differential, tapped some liquidity, then went bearish. Let's look at another example. Yeah, another example too could be found here. Yeah, the last whitish bullish candle is our breaker. This momentum whitish candle caused by high impact news. Yeah, so the whole of this zone was our breaker order block zone. You see price violated the zone, returned to the breaker twice, tapped some liquidity, then went bearish. It happens almost all the time. So my people, what you must know about breaker order block, they are most effective when price is moving very bullish or bearish with minimal pullbacks, that is not returning to more premium or discount areas such as a standard order block. So it's like that. They are located almost everywhere. Another typical example is the last white bullish candle with a long upper wick, but this time because the wick was so long, so we will not include it. Just target the body, then extend it, but you can even include the lower wick if you don't mind, because the body is too small. So we just extend or include the lower wick, extend it. So examining it well, another typical example is our last white bullish candle here with a long lower wick, which looks like a dragonfly doji. In drawing it, since its body is so small, you can include its wick, because targeting only its body will not give you any meaningful or sizable order block zone. So examining it carefully, you could see price violated the breaker level, went bullish, came back for a retest, but this time it traded beyond it a bit and then went bullish. So that's how it is, my people. Yeah, so these are the three high probability types of order blocks we have. The first one has to do with a standard order block. The second one is engulfed order block, and the third one is breaker order block. On this note, I would like to sign out here. See you in my next video. I love you all. Bye bye.